You've probably heard the saying, gold shines brightest in dark times. Well, Q1 2025 has been proof of that. Between renewed Trump tariffs, inflation fears, and recession whispers, investors have been running for safety. So, which ETFs crushed it in the first quarter of 2025? Today, I'm breaking down the 5 best performing ETFs of Q1 2025 according to Morningstar, and why a surprising theme is dominating the list. Whether you're looking for protection, growth, or just want to see what smart money is buying, you're in the right place. So what's going on? In uncertain times, money flows where it feels safe, and right now, that's gold. But not physical gold. We're seeing a surge into gold mining ETFs, offering leverage to rising gold prices, but without needing to buy the metal itself. First up is LNG Gold Mining ETF, ticker AUCO. This ETF tracks global gold mining companies, and it's up a staggering 38.22% in Q1 alone. Over 12 months, nearly 59%. These are the kinds of returns that defensive investors dream of when markets start shaking. In second position is UBS Soloactive Global Pure Gold Miners ETF, ticker UBUD. Focused purely on gold miners, this ETF climbed 33.10% in Q1 and topped 59.54% year over year. Unlike the first ETF, this one only includes companies that make most of their money from gold mining. So no diversified miners here, but it gives you tighter, more focused exposure to gold prices. Third is iShares Gold Producers ETF, ticker IAUP. This one's all about consistency. 31.17% in Q1 and 44.36% over the year. It holds a mix of established global gold producers, making it a solid middle ground between broad mining exposure and niche plays like the second ETF. In other words, it's not as concentrated as a pure play, but still gives you strong direct exposure to rising gold prices without taking on too much risk. In number 4 position is, you guessed it, another gold ETF, but this one is by VanEck. It's VanEck Gold Miners ETF, ticker GDX. This ETF gives exposure to some of the biggest gold producers in the world, up 31.07% in Q1 and 43.91% over 12 months. It's showing that gold miners, often ignored during bull markets, are now back in the spotlight. And finally, we have iShares Euro Stocks Banks ETF, ticker EXX1. Now for something different, a banking ETF focused on Eurozone financials. Surprised? You're not alone. This ETF benefited from rising interest margins across European banks, even as economic forecasts remain shaky. It's the only non-gold pick in this top 5, proving that sector selection still matters. So what can we learn from this? Gold and recession-resistant sectors are clearly where the money is flowing, and ETFs offer a simple, diversified way to tap into that. But a quick reminder, just because something performed well in Q1 doesn't mean it will shine forever. Gold's great in a crisis, but it's not always a long-term growth play. Still, for anyone worried about volatility or just tired of watching their portfolio bleed, these ETFs show that there are still opportunities if you know where to look. So, will gold keep shining through 2025, or are we nearing the top? Let me know what you think in the comments. If this breakdown helped, give it a like, subscribe, and hit that bell so you don't miss what's coming next. Now that you've watched this, watch this next.